Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here for the CPI and PPI breakdown. First, if you're here, you should have watched my previous video where I talked about the CPI forecast. Before we got the CPI. There was a video I did on the CPI forecast. The link should be popping up somewhere. So let's get to now the breakdown and analyzing the aftermath. Here we are. This was the outcome. Core CPI year over year, 4.7% versus a forecast of 4.8%, and the previous number was 4.8%. Core CPI month over month, 0.2%, 20 basis points, same as the forecast, same as the previous one. Headline CPI for all items, 0.2%, same with the forecast, same with the previous also. Let me zoom in. Okay, the CPI year over year, headline CPI for all items popped up to 3.2%, below the forecast of 3.3% and above the previous number of 3%. And you can see there was also some big data here on jobless claims, but that's not what we're looking at today. Today we are here on the CPI numbers. So first you can see the outcome was below estimate for the year over year numbers, but according to estimates on the month over month numbers. Something to note here, if you remember the CPI forecast, at the time I was doing the CPI forecast, the core CPI forecast was 4.7% at that time, but there was a last minute change in the forecast, and yeah, this is the outcome we got. I'll not go too much into the details saying what changed, but let's just look at this report as it is. Starting with the core CPI month over month, let's analyze the trend. This one. Here we are. Yeah, this is US core CPI month over month figure. We're analyzing the trend now, and as you can see, the month over month change was constant for this month, the month of July, and it's kind of stabilizing, showing that inflation is kind of becoming stubborn to fight on the core numbers here, the month over month. If it's stagnating, it means, yeah, this number is likely to cause headaches for the Fed going on. Another number we should look at is, yeah, this is the CPI index month over month. Now this is for the headline CPI, right? This is from May 2021 to now. Yeah, this is from May. Yeah, from May 2021 to now we are in July. This is August 2023. So you can see the month over month changes have undergone some significant declines. At some point here, it was even zero. And yeah, now we are stabilizing above 0.1%. So now we're 20 basis points. It seems this is where we'll be stabilizing for a while. In the next month, we're going to see if this month over month figure will come out higher, which of course is likely to mean that inflation will be stubborn to fight. And yeah, in a few, you'll see once I get the breakdown itself, you will see why inflation is likely to be more stubborn to fight going forward. Yeah, this is it. Now let's look at the year over year numbers. Of course, the headline CPI, Consumer Price Index, year over year. This is the chart. You can see we are coming from the peak of 9.1% in last year, July. Yeah, the June reading, we got 9.1%. And ever since then, we had a trend of 12 months, a full year of inflation consistently coming out lower on a year over year basis every month. And now that streak has been snapped, and now we got a uptick in the year over year number. Yep, you can see here 3.2% higher than the previous one. All these are the times the number was below the previous one. Yep, and you can see here since February we've been getting like almost full percentage point declines. Yeah. So That, of course, was the base effect. If you watched my previous video on the CPI forecast and, of course, the CPI breakdown for last month's CPI, you do understand that, yeah, you do understand what the base effect is and why this number was like this. So, first of all, this forecast was nothing to raise alarms because, yeah, it was expected that the base effect would now start wearing off. Now that this July reading, as you can see here, we were comparing this July reading to last year's July reading, where, yeah, 9.1%, and now comparing these prices to these very high prices, of course the decline was drastic, but now we're comparing these prices to these prices here. So yeah, the YoY change is bound to be it's bound to be more. Is it more? Yeah, it's bound to be more because these were low readings. So here we are. You can see this trend, this now 12-month trend of decline. It's now starting to wear off because during the previous series of 12 months, where were we? Yeah, during the previous series of 12 months, CPI was on a steady increase. But now, since this reading, this 12 month change was declining, and now we are likely to see this 12 months change for going forward, like from July this month, July this year to next year, same time, we are likely to see these numbers stabilize. Of course, let me go to the report itself. Oh, before we go there, let's look at the core CPI. This is no, this is the one. Yeah, core CPI year over year. As you can see, this one is quite stable, and yeah, it's stubborn. Let's just call it that. It's coming down, but it's still very high. Over double the estimate. Over double the inflation target for the Fed. The inflation target, of course, is 2%, but now we are at 4.7%, meaning we are closer to the top than we are to the bottom. So yeah, that of course means, but it's kind of cooling, so that's some level of good news. Okay, now let me look at the CPI report itself. Here we are. This is the CPI report. As you can see, this is, yeah, the BLS news release, Consumer Price Index for July 2023. And just going straight to this table because this is where my focus is at. And this is where we see where the inflation problem is. So first, you can see this is the YoY changes in the indices, and you can see the energy indices. The big declines are really here because if you saw the previous video where I was talking about the forecast for the CPI, yeah, it was expected to see this big change on a year-over-year basis, but an uptick in the month-over-month. Going to look at that in a few of these MOM figures. So for energy as a whole, there was that big drop in the index, and what else? Yeah, this is where the biggest decline is, and yeah, see here used contracts, and okay, this is a red flag. First, you can see this is a red flag for inflation because if the energy index is the only one declining on a year-over-year basis, that means trouble going forward because as you saw, oil prices are back on the rise, and you can see here fuel oil. There was an uptick of 3%, a whole 3%. The previous month, you can see the decline here was 40 basis points. The previous month's decline was 70. Whoa, this is 700 basis points. The previous month decline was, yeah, the declines have been big in the oil energy sector, but now it's an uptick, and this is likely to be reflected in the next readings we will get. As you can see, if this energy index is the one registering the biggest declines and thus pushing the headline CPI down on a year over year basis, if these numbers continue coming in, okay, if the energy prices continue rising like we saw here, it's starting to rise. It's very likely that the, the year over year changes will start being smaller. The declines will start being smaller, and we can see we can expect an uptick in the CPI numbers, the CPI month over month numbers, and of course the CPI year over year numbers. Because if the energy sector is the only one that's declining, and we are seeing energy prices, oil price is back on the rise, then that of course means going forward is it's it's a bit complicated. It's going to be a bit more stubborn to fight inflation for the Fed. So first, yep, I think I have talked about that because this is where the main things were. This is where, for food and items, you can see food has been quite steady on a month of month change. Food, yeah, food at home is increasing. Yep, this is a 30 basis points increase. And in the previous months, you can see here since April, since March, it was declining, picked up a bit in May, was flat in June. Now in July, it's up 30 basis points. On a year over year basis, it's up 3.6%. And yeah, the energy sector is the only one that has these massive declines, thus pushing the whole, what do you call it? The whole CPI number downwards. But if the oil prices continue rising, of course. Okay, I'm just going circles here. Now let's go to analyzing the market reaction. Here we are. First, and this is the probably the only one I look at, the dollar index. Here's where we're analyzing the effect of the CPI on the dollar index, and in turn, and just whole other dollar currency pair against the dollar. So this is the hour where the CPI was released during it was noon GMT 12:30. So this is the hour where the CPI was released, and you can see there was this big. Where's this pen? Yeah, you can see there was this big spike downwards in price action, and it can be explained. It started a downward tick and then kind of pushed upwards. Let me go to my Discord now where I explain this and what it really meant. Here we are. Yep. Explaining this move, what happened. You can see I marked my chart number one, number two. So number one, this is what happened according to my understanding, and that's probably correct. This is what happened. There was an initial excitement of the numbers coming in below estimates. There was, of course, that excitement, as you have seen. Initial excitement of the numbers coming below estimates, which of course translates into a drop in rate hike expectations, and in turn, that's what fueled the bears on the dollar index initially, right? As you have seen, there was this big drop in the dollar index as the market was kind of happy or excited that the numbers are below estimates, and it's kind of short term relief. Then as the data was being digested, as people looked into the CPI, as investors continued looking into the core numbers, analyzing the trends, as I have done just in the previous minutes. Yeah, as we analyze the trends above, this data shows inflation is stubborn to fight, and now finally, the base effect seems to have worn off, right? On the headline CPI YoY numbers, and soon even on the core CPI YoY number. This, of course, raises interest rate hike expectations since the stubborn inflation is giving the Fed room for another hike, therefore fueling the bullish momentum in the dollar index, and thus the initial bearish impulse was cancelled out by the bulls first. Still, within the hour of the release, and even in the following hours, the DXY and closing up the day green. So yeah, as you have seen here, there was this initial excitement of yay, the numbers are below estimates. This is kind of good news. Maybe the Fed will slow down with the rate hikes and blah blah blah. But 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 these numbers are showing inflation is going to be stubborn to fight, especially the year-over-year numbers as you have seen. The base effect is now wearing off, and we're not likely to see any big declines in the headline CPI YoY number. It's likely now to keep at 3% or maybe even rise. Therefore, yeah, that means, of course, the Fed, maybe not now, but in the future, they will have room for more rate hikes. So you can see the dollar index just turned bullish and wiped out wiped out the whole bearish momentum that was there during the hour of the release. Just turned bullish and closed the day green, and that was it. That is essentially what happened. I can't find a better way to explain that move logically. Okay, now let's go to the PPI. Here we are. These are the PPI numbers. Core PPI month over month for July, 0.3%. PPI month over month, July for all items, 0.3%. Of course, you know the producer price index is inflation at inflation of wholesale prices, which are then carried forward onto the consumers. So yeah, this is, you can call this a leading indicator of the CPI. Yep, because these are wholesale prices which will be carried forward onto the consumer during the next month, or yeah, the next month when the new stock is being sold. So yeah, there was an uptick in the PPI numbers, and you can see it was above the estimates. The estimates were 20 basis points, but the actual was 30 basis points, which of course raises interest rate expectations, and of course that kind of has a similar effect with the CPI numbers if the CPI numbers would have come above estimates. This is an inflation reading, as you've heard me mention, and yeah, this reading coming out above estimates just means inflation expectations are now higher, and yeah, that of course gives the Federal Reserve room for more rate hikes. Let's look at the trend in these PPI numbers. This is the core producer price index month over month. We are looking at the trend now. You can see this is last year. Yeah, the numbers are very high. Let's zoom in and see. Yep, as you can see on a month over month basis, the uptick was very high, probably fueled by the increase in oil prices. Therefore, manufacturing costs are likely to increase, and therefore, this makes even prices increase. So it's almost as if we're starting to see the increase in the oil price start to spill over into the consumer prices first by spilling over into the producer prices. So yeah, you can see the month over month change here was quite encouraging, stabilizing here at 0.1%, just below 0.2%. Some point it was even zero, and yeah, you can see at some point it was even negative. You can see it was revised from 0.1%, but now it's an uptick of 30 basis points. This is not good news. This is not looking good for inflation. And yeah, let's look at the other one. Now, this is the producer price index for all items on a month over month basis. Yeah, you can see here the declines here were significant on a month over month basis. The declines here were significant. And yeah, it was kind of stabilizing low, but now you can see this uptick, and this uptick is not a good sign. Really, it's not a good sign because if you know prices, if you understand what I'm talking about here, this uptick will of course be reflected in the CPI in the next month, And if these numbers continue coming in, should these numbers continue coming in strong, yep, you can expect inflation will be more stubborn to fight, and therefore more rate hike increases from the Fed. Okay, not exactly more rate hikes because they're in restrictive territory, as Jerome Powell said, but this gives the Fed room to keep rates higher for longer and even deliver another one or another two if inflation continues to be stubborn. So yeah, that was it. Now let's look at the dollar index and price action there. Here we are. You can see this is the hour where the PPI was released. I just used this one to show that this move complements the CPI move after this initial bearish impulse. Yep, the dollar index ticked up and we got a retracement here, and then the PPI kind of fueled the move upwards, the continued move. Yeah. Now let's go to the chart to see the forecast. Yeah, so on the dollar index, this is what I am seeing currently, and this is what on the CPI day, by the way, I was expecting an uptick in the dollar index like by almost a full percentage point, but that did not happen because, of course, the numbers kind of were tricky a bit. And you can see we got that long wick here, and now the PPI came and pushed price upwards, and it's likely that this resistance will not hold now that we've gotten the NFPs and showed a downtick in the unemployment rate. And now we got the CPI and it's showing inflation is likely to be more stubborn to fight. So it's not looking good for the bears on the dollar index here. It's likely that the bullish momentum will continue on for the next few days. Now let me look at the euro dollar. This is what I had for the CPI. I was looking to short here and have my take profit here, but as you can see and as you saw on the dollar index back there was that long wick. Yep, and that upward spike kind of took me out. And you can see I was not wrong. My expectation was not wrong, but my bias was correct. But the entry was just the wrong one on an intraday basis. It was not the correct one. But on the following day, let's look at what happened the following day. And the following day, this is what I had for the PPI, and I shorted and made some good money here. This big red candle, this big red engulfing candle, this is the hour which the CPI was released, and no, not the CPI, the PPI was released, and yeah, I made I made my entries there, and it was a clean move as opposed to this this uncomfortable spike we got during the CPI. PPI move was the clean one, and yeah, I didn't exactly miss on a lot of money. I recovered. I somehow managed to recover most of the losses that I made here on this spike. Yeah, so I can say it was fair game. Now let me look at. Okay, I will not. I want to look at the currency strength meter to see which was the best pair to trade on these releases, but let me just not look at that for today. You can check that out on your own. This setup is a flag, by the way. This is a flag. So you can see it's a retracement from a big bearish impulse. If you want to know if the flag is valid, there has to be an initial impulse to either direction. In this case, it was to the bear side. This downward impulse, and then price kind of retraced, and then yeah, another continuation here, another big bearish impulse likely followed, as you can see. So yeah, this is a flag and was kind of legit. There were several confluences here telling me that this is a very valid setup, one that's a risk worth taking. As you can see, it was kind of forming a retest of this support, now turning into a resistance, formed a retest, and then bam, the downtrend continued. It's a very, it's not a very common pattern. I can also say it's rare, but when it comes, it's usually very clean, very reliable, especially when the market conditions match, as we have seen in this scenario. When the fundamentals are in line with the technicals, it makes for good setup and, of course, a beautiful outcome, as you can see here. It was free. This setup was free on my Discord. Let me show you in fact. Yep, here we are. See, this is the free section and the charts part. This is, yeah, this was yesterday on Friday, 11:34 a.m. GMT. Waiting for this. No, this is not GMT. This is East African time. Waiting for this, and then yeah. Initially, it was missed, but then yeah, the limit was reached during the hour of the PPI. It was a clean setup. It was, yeah, good results, as you can see. Now I'm done with this video. Have a lovely week and have a lovely weekend and have a lovely week. Have a lovely trading week next week. Thank you.